Okay, so welcome to the week ahead look, the week ahead lookout pre-market meeting. Hope you're all well. Hope you all had a good weekend. Hello, hello. So, this week we've got a couple of different things we're paying attention to, specifically some metals. We've already executed long on some of the US indices markets. Um, so we'll run through some of those things. We'll go through some economics that are going on and some news that we are looking out for next week. So nothing overly crazy next week. We do have Japanese GDP coming out quarter on quarter tonight. That shouldn't be a huge deal for us as we're not involved with the yen right now. We do have CPI coming out for Canada. RBA meeting minutes, that'll be interesting to pay attention to. However, again, I don't think we're exposed to the Australian dollar right now. CPI for the UK, as well as FOMC minutes for the US. I'm not going to read through all of this, but there's a couple of things to pay attention to. Nothing overly dramatic, however. What we do need to be fully aware of is the government reopening within the US. So there is no, as far as I'm aware, there is no specific date that we could expect them to open. However, the talks about that happening are getting a little bit louder and it seems a little bit more promising. So what we are expecting, or what the markets are expecting from that, is basically worse data, which is completely to be expected. So what we need to account for is the previous data we had from the US. Let me just pull up the heat map here for the US. So previous labor data wasn't great before we had the shutdown. There is no reason to really expect that to change much. What we also need to think about is the fact that when the government did shut down, there was a loss of jobs. So that can impact the jobs reading, which then leads to the thought process of it's very, very obvious that when the government shuts down, people go on unemployment. They might file for unemployment, for unemployment claims. I'm not sure what it's called in America. Um, so that is naturally going to have an effect on the labor data, obviously. But are investors going to pay attention too much to it? So there's two sides to this coin. Yes, obviously they will, as always. But then you also layer on the weight of it, considering we haven't had any labor data or jobs data for quite some time. So it's going to be even more important. But then on the other hand, if we all know that the government shutdown does affect the jobs market, how much weight is that going to have? Does that make sense? Do you get what I'm saying? Hopefully so. Either way, we are expecting worse data. So let's just dive right into it. So we're looking at Euro pound longs, Australian dollar, New Zealand dollar longs. We're looking at dollar Swiss shorts, pound dollar shorts, and then we've got a couple of other readings. A couple of other charts down here that are edge finder readings that we'll be paying attention to. So first of all, euro pound is seeming quite interesting. We've got the US economy is deteriorating fast, labor market weakness, rising unemployment, collapse of payrolled unemployment, and the third quarter GDP came in at 0.1, which is really, really bad. The Bank of England is now boxed into cutting rates in December, while the ECB is on hold with no further easing expected. Political instability in the UK adds a risk premium. The euro is relatively stable. The pound is structurally weak. Euro strength is obviously something we can capitalize on here, paired with the sterling weakness. So that actually just reminds me of something. Before we go any further into this, and people are watching this on YouTube as well, I'm going to leave a link. People in Discord that are watching right now, there is a link in the broadcast. I'm doing a webinar tomorrow with A1 Trading with Trader Nick and a couple of their guys, where I'm going to be deep diving into basically what I think about the markets for the year ahead in 2026. If you're not already signed up to that, it's completely free. I would highly suggest it because my focus on that webinar or in that webinar will be on the UK and how I'm going to be trading around my opinion in 2026. So with euro pound, we've got a very, very clear technical setup here. We've got a very established trend on the H4 bullish trend. We've got a relatively decent trend line. I don't really care too much about trend lines, but it is there, so I'm going to leave it there. We've got previous structure, very typical break and retest right here. You guys know or should know that I love a break and retest. I'm actually not sure if this is a fib level. Let me just double check. That's not what I wanted. Oops. Fib retracement, draw it from the low to the high. It does actually, coincidentally. So we're currently rejecting the 50% retracement level. So there is an entry here pretty much as the market opens. I'm not going to be entering on market open, obviously. However, this is a very likely signal that I'll look to send pretty much tomorrow morning as soon as we get into London session. The Aussie New Zealand. So something that we need to think about when trading the Aussie New Zealand right now specifically is its price level. So this market is what we call a mean reverting market. So it's basically a gold mine for people that counter trend trade, typically speaking. Now, obviously, that's not something you should just go and do. You shouldn't just blindly go and sell or buy the Aussie New Zealand based on that. But this is the weekly time frame. So when we draw or we just sort of think about how this market moves or look at it, really, I mean, what does it do? It just moves sideways. And this has been the case since, when was this? Back in 2014. So this is one of those markets where fundamentally buyers make sense. So we've got the Australia delivered strong employment data. The market is priced in further RBA cuts. Inflation remains sticky, productivity is weak, and wages elevated. So the Australian dollar is relatively supported, nothing overly insane, but we could be looking to buy the Australian dollar. Meanwhile, New Zealand unemployment has risen to 5.3, and the RBNZ is signaling weakness to cut again after already delivering a 50 basis point cut. So we're obviously looking there at a really nice rate spread or yield spread. So longs are good. Fundamentally, a long position makes a lot of sense. But again, just by looking at this chart, do we want to be buying here? My answer is no. There is only one thing really that could change my mind, because I'm not really looking for this market to start, have a sort of complete breakout of over a decade range, come all the way back to these highs. I think that would be way too optimistic. So what I'm looking for is basically a retest of this level. If we can get a very, very convincing pullback, maybe some sort of consolidation, and the fundamentals are still there, I might look to be a buyer and see if we can get a larger breakout of this decade plus consolidation or range bound behavior, if you will. Again, it's kind of risky. It's not my favorite idea, but if you are a bit of a risk taker, it might be one for you. Darwin, when is COT data coming out, and will it have driver to make to market moves? No, not really. So COT data, it's not something really that's overly relevant to the markets in terms of its movements. It can probably have a small impact, especially on illiquid assets, things that aren't super liquid, obviously like Eurodollar, NASDAQ, etc. So it could maybe have some movements on less liquid markets, but I highly, highly doubt it. As for when it's coming out, it will be whenever the government reopens. I'm not sure. I don't have an exact date. Likely it will, let's say they open on Monday. It will likely come out on the next regular scheduled date for COT to be released, which I think is Thursdays. But yeah, we'll just have to see. So next up, we've got Pound Swiss. This is probably the most obvious trade. Now, we were buyers of Pound Swiss. I can't remember exactly when it was. It was maybe last month or so, trying to basically just cash in on the swaps, which we did, but we still took a loss overall on the position. I'm now looking to be a short seller. So there's a couple of different reasons for this. We've got a really nice bearish reading here on the edge finder for Pound Swiss. All the way down here, we've got a very bearish reading of 9, which basically does all the fundamental heavy lifting for us. So we don't really need to do that much in terms of deep dives in economics. When it comes to price action, we've got a very, very nice technical setup here. Very aggressive downtrend on pretty much all time frames, H4, daily, weekly, etc. And now, if we're looking to execute on the H4, again, we've already got a very, very simple technical setup here. So we've got, actually, let me just see if this works. Oh, it does. I've got a pen. So we've got a really nice level of structure. We've broken, looking for this retest into the fib zone level, so between the 0.5 and the 618 level, and then looking to continue shorts to the downside. There's really nothing there we go. Really nothing overly interesting about this trade. It's, again, very bread and butter, very straightforward and basic. But I think as long as we can get some sort of entry, it's essentially just a free ride lower. Unless we get some sort of S&B intervention, which is definitely possible, but it's not going to, it's not enough to waver me away from this trade just yet anyway. So silver's the next one. So I'm already in a few positions on silver. Nothing too heavy. In fact, they're very, very small. I mean, you can see I bought up here. I'm only down £5. So it's very, very minute position sizing. And basically my goal here is to just layer, and continue to layer these positions on. And basically build up a large position through smaller positions and bringing my average price down. Very sort of typical DCA approach. Now, why am I looking to buy here? Well, buy at some point. Well, we've got a very, very sort of typical pullback look here. So we had, sorry, 1 second. There we go. We had obviously bearish trend here. We had a, well, not bearish trend, sorry, bearish move here. That was mainly driven by profit taking. We also had that 9 weekly candle thing going on with gold, which obviously did add some pressure as people look at sort of historical price movements and patterns and things. That seems to be pretty much over. So I'm looking to get back into metals. We did have a trend change here into a bullish trend again. We've seen a rejection off our 50 moving average right there. We've got this previous level of structure that could act as a very nice break and retest sort of formation. So as long as we can hold some level here, I will be sending a long position signal. So we've got two approaches and both are more of a nitpicking idea. So either we come back down to this 50 moving average and reject again, in which case I will look to send a signal. The only downside there is the stop loss would have to be relatively wide. And on the other hand, we could come down here, retest all of this structure, retest this 200 moving average, and then we pop higher, and that would be slightly higher quality in my opinion, but it doesn't really matter either way. At this point on metals, I'd be very happy to just be involved and see if we can catch some sort of a runner. When it comes to fib levels, let's just see. So yeah, silver is currently retesting this 50% retracement level as well, which could add a little bit of a bolster to price and bring in a couple of buyers, but we'll have to see. Again, I'm not overly married to exactly where I get in. It's more just the direction. As long as we can see some sort of rejection within this area, I'd be very happy to be a buyer. Silver has also come back onto the edge finder as a bullish reading with a score of 5. So the fundamental or the economic indicators are there, the technicals are there. It's a very pretty nice trade, if you will. Next up, we have NASDAQ. So NASDAQ, S&P, Dow, in fact, global equities or indices, global equities and indices, I should say, had a very, very rough period from the 30th of October. So pretty much for 2 weeks, give or take, we've had a tricky time on the indices trying to rally higher, failing multiple times. So what I'm looking to do is twofold. So as you already know, we're already in the Dow long position here, which is actually in some small drawdown, but I would completely expect this to continue higher. I'm sitting very bullish on the US indices specifically. Again, we do have the government reopening talks. We've got the worst labor data talks. I am still expecting the Fed to cut rates. It might not be in December, but I'm very, very confident that their rate cutting cycle will continue at some point. It might be later into 2026, sort of January, February, March time, sort of Q1, Q2. It might not be December, as I mentioned. But either way, that idea is still there to be long indices as the Fed is cutting rates. So we came into this level of support. Excuse me. When I'm talking about this, by the way, the same analysis applies to things like the Dow that we took, the NASDAQ, the S&P, because all the price movements are very similar. I'm just going to group them all into the NASDAQ, so just keep that in mind. So we came into this level of previous structure. It's not overly accurate. We did have a really nice rejection here and here. Obviously, we've broken through previously. We've got a slight trend line here. It's nothing overly convincing in terms of direction, but it has been holding up. And we've seen a rejection of it here. So again, I'm just going to keep it marked up. We've got a bullish trend between the moving averages, although we are looking like we might have some sort of change in trend here. I'm not really married to that idea. I would expect higher prices to come. Overall, it's, again, a very, very simple trade idea. I'm not going to be entering NASDAQ. I'm showing this more for anyone that missed the Dow trade or anyone that wants to double up exposure on US. That's fine. I'm not going to do that in terms of signals anyway. But I do think that the NASDAQ, the Dow, S&P, etc. do have room to continue higher. The Edge Finder is suggesting the same thing also with the NASDAQ, China 50 and the Dow actually all reading bullish. The S&P is slightly lower with a score of 5. China 50, I am actually in a position, so this is just a little bit of a sidetrack, but for anyone that may not know, I did tell you guys on Friday in the Discord, but I took a long position on China 50 at the same time I took one on the Dow, and it's exactly the same reasoning. The technicals are pretty much the same idea. Break and retest, using this as support, bullish trend, and edge finder reading. So if you want to copy, that's your choice. I'm not going to send it a signal. Again, I don't want to double up risk on the indices. Anyway, next up we have the dollar Swiss. So, hold on, I'm just going to take a drink. I feel like I'm talking really fast. Just bear with me for a second. Excuse me. Thoughts on CAD and USD? We'll go into those slightly after Duza. Once we've gone through the watch list, we'll go into individual things. So, dollar Swiss. Switzerland is close to finalizing a tariff deal. So if any of you guys didn't know, last week the Swiss, in fact, I think it might have even been over the past 2 weeks or so. Either way, the Swiss has been exhibiting very, very strong momentum. I mean, if you look at anything Swiss related, you will see the Swiss has been dominating. For a while, I actually wasn't sure why. Obviously, I've been bedbound. But it does seem like, obviously, there is a reason to it, which is Switzerland closing in on finalizing a tariff deal with the US, which would reduce US tariffs from 39% to 15%. This removes downside risk to Swiss growth, reduces pressure on the S&B to ease further, and reinforces Swiss stability. Now, again, that does apply over to our pound Swiss short idea as well, that we did discuss slightly earlier in this webinar. So, in terms of technicals, we've got 2 potential entries. This one right here where price already is, I don't really like this idea, just because we've already had quite a strong sell-off, and this retracement doesn't look strong enough for me to be overly happy. It is on sort of the on the playbook, just because obviously it's a break and retest. It could potentially continue lower from here if that pressure decides to follow through into this week. Ideally, we come higher into a 50% retracement, we come and meet our 200 moving average, we come into the slightly higher structure here, and then we start selling off and we can enter some shorts at that point. This is my sort of preferred situation, is if we come into the 50% retracement. I might try a short here, but I will update you on that because it does seem a little bit too risky for me right now. Pound, oops, let me get rid of the pen. Here, pound dollar. So pound dollar shorts, it's tricky because I am very bearish on the UK, or on the pound specifically. I think the UK is in a very tricky position, blah, blah, blah. We've spoken about this many times before. However, with the US data also poised to come out, and obviously the Fed cuts, it makes it tricky. However, with the weak UK labour data, so slowing GDP, political uncertainty, and a high likelihood of a Bank of England rate cut in December, it's all just adding pressure to the pound. The US is softening, but the pound is basically worse. So this is a situation of we've got 2 bearish currencies. Which one is worse? In my opinion, it's the UK or the pound. So I think this might be quite a nice hedging opportunity. So if I'm looking to be short US dollars by things like going short dollar Swiss, if we could go short pound dollar, that would just hedge off some of that dollar short risk that we are taking, and still position us on sort of a macro favorable position. Again, it's not a super high probability trade, but the trend is there. We've got some structure. We do have some loose fundamentals to back the idea. So I'll probably take an attempt, but it will be with a slightly reduced risk. Next up is the pound CAD, or finally the pound CAD. So this is the last thing on my watch list right now. So pound CAD is currently getting a bearish reading of -8. This one was also pretty much just an edge finder find. I haven't done any serious macro research on this one, to be quite honest with you. However, I think the technicals are completely fine. We do have a nice fib level that's come into play right here. Was that right? Hold on. Fib retracement from low to high here. So it's not perfect, but obviously it depends where you draw your fibs. So if, for example, if we wanted to draw it from this high, this one lines up fine. It's just one of those things with the fibs, obviously a little bit sort of discretional. However, in this case, we do have price rejecting our 50% retracement level multiple times. We've got a bearish trend. 200 moving average is coming down, so we're not really looking at a mean reversion situation anymore where we could spike higher to meet the 200 that could stop us out. So in this case, if we can come up one final time, test this 200, test this this previous level as well as break and retest, of course, then look to be a short seller. I think again that would be a very, very nice idea, and I'd be very happy to take that one if we can get the opportunity to execute in this market. There are some nice levels to the left that could act as some pretty large areas to take profit. First of all is down here towards 18,099. They are spread betting prices, by the way, so they might vary from your prices on TradingView. So this seems like the ideal take profit level. We do have a very, very nice sort of asymmetric risk opportunity. For those of you who don't know, asymmetric basically just means positive R&R. So the potential upside outweighs the potential downside is basically all that means. If any of you want, feel free to screenshot the Edge Finder setups. I will send that tomorrow as always. We've already discussed the news. I don't think there's anything there. It's for the US dollar and the Canadian dollar. Let's just see. So the US heat map is looking quite optimistic right now with a score of 60. Everything, well, not everything, but there is quite a wide range of things here that are giving us a sort of bullish bias overall. However, again, this could completely change when we get that government reopening, because it's not just NFP. We're going to get like a sea of data flood us. So this whole thing could completely flip to being super bearish. It could go increasingly bullish. So I wouldn't take the current US data as a huge signal on what to do, to be perfectly honest with you. I would be very cautious trading the US or trading the USD until we get until the government does reopen. As for Canada, it's actually looking quite optimistic right now. So one of the big things that I was sort of harping on about over the past, well, a couple of weeks ago was Canadian dollar weakness, because obviously there's been a lot of problems. However, we can see that sort of changing now. The Canadian dollar is getting a 87.5% reading. So I would be looking to be long on the Canadian dollar. We've also got the Canadian dollar popping up here on the Edge Finder, with pound CAD obviously reading bearish. So I think there are different opportunities we can go for this week. We've got some indices, we've got some currencies, and we've got metals as well. So we've got a host of choices on what to do this week. So it's now a case of just waiting for the entry opportunities, and then we can look to execute. Guys, that is it from me today. I don't think there's anything else really for me to cover. Again, main focal point, or the main thing you should be watching, is the US. Just wait for the government to reopen, and then I'll probably make a video once the government does reopen, and that way you guys can fully understand what's going on with the data that's come out, etc, etc. Guys, have a good one, have a great week. I'll talk to you in the Discord. I hope you enjoyed your weekends and enjoy the rest of your Sundays. See you later.